Alright, just a quick one. I want to tell you guys the importance behind the inverse fair value gap and how to best make use of it. It has helped me over times to catch a lot of movement in the recent time as well, and even yesterday night, my last trade yesterday. It was such a swift and a successful trade I took using the inverse fair value gap, and some other one that I have spotted and how far they have delivered. It is something that I should not hide it before. I mean, from you guys, so you guys can try to relate your analysis with it. Most especially when you find it in a very good point of interest. So this is a volatility 10 IS that I've been buying since last week, or since early this week, right? Yes, early this week. Although I used to analyze some, I mean, I will not be there sometime. It will play out and go, and some I will be available to take it, and it has never, it hardly fail. It hardly fail, it hardly fail. So this volatility 10 IS, we are on a daily time frame. All right, we are on a daily time frame, and in the daily time frame, the market has been bearish for quite some times, coming into an external liquidity, which is this one, and that liquidity has been swept into a fair value gap. The internal liquidity was swept into a fair value gap, which is a very good point of interest because two things are involved here. An external liquidity swept, and once an external liquidity is swept, the next thing is the market to start looking for internal liquidity. Alright, so the external liquidity has been swept here into a fair value gap, which makes it a very strong and an old high. So what do we now wait for? We go down to the lower time frame. We zoom it out to see and wait until the candlestick has finished forming. And as you can see, the candlestick has formed and created a CRT, a CRT, leaving this as a doji, and this CRT now acted as our manipulation while the distribution started from here. So on the first day of this distribution, there is this bullish movement, bullish candle that just formed here. So this bullish candle that formed here now is what qualified this setup as a valid one. But what we do next? The next thing we do is to go down to the 4-hour time frame to see the kind of structure that it has created, or the imbalances that it has created, because that was a very sharp movement. So let's go down to the network. Behave yourself. Sorry, my dear. The network is delaying. I'm switching to 4-hour. Okay, this is the 4-hour time frame. So you can see that sharp movement of daily candle that happened left this fair value gap behind. This fair value gap ordinarily was supposed to be the imbalance that's supposed to have pushed down the price to continue the bearish movement. But you can see that it created it violated it and then closed above the fair value gap. So this makes this one an inverse fair value gap. Alright. So as the market gets down into this place, we'll go for a buy. To continue our buy. And having seen this in the higher time frame, it become a swing trade because it's a higher time frame. All right. So now, how do you confirm your buy? You can go down to, let's say, for the 1 hour time frame to see the candle that it prints. If the candle that it prints is the type that gives us our confirmation entry, then that is where you're supposed to put your buy. Hold on, please. Okay. Can imagine a very good candle here that left a very big wick below, taking this liquidity, and then after the close of this bullish candle here, that's our confirmation entry for a buy. You understand? And that was how it went, and that's how it has been buying since that day. When was that? That was on the 26th, on the 28th of this month. You understand? So I'll go to other one again. The one I saw yesterday on the volatility 75 that is still selling up to now. Volatility 75. This is it now, right? As it's still selling up to now. I saw it yesterday, but other pairs that I was trading made me to forget it. Okay, look at now. Look at it. Look at it. This is let's say go to the daily time frame as a day trader. You can see that this market has been buying. Meanwhile, remember that there was a break of there was a change of character here that left this. There was a change of character. Let me remove this thing. Let me remove this thing to tidy up my. You see? So this market was bullish before, and then there was a sweep of liquidity. After the sweep of liquidity, the market dragged down here and break this low, this higher low. So created this a breaker block, alright? Breaker block. Created a breaker block on the higher time frame. And if you check that this breaker block was traded into the above the 50% Fibonacci retracement level of the breaker area. So having seen this now, what do we do? As at that yesterday, when I saw this, I went down to the 1 hour time frame. Sorry, network. Just opening. Okay. I went down to the 1 hour time frame, and this is the 4 hour time frame, and I have seen a sweep of liquidity and a bearish closure. Sweep of liquidity and a bearish closure, which give me the reason to expect a sell. But that wasn't enough. I have to go down to the 1 hour time frame to check whether there is any good market structure that will give me the reason to sell. All right, look at now. Now there is this a turtle swoop that just happened here. After this bullish movement, there was a drop that happened. Understand? And this drop now caused a change in the state of delivery. All right. It causes a change in the state of delivery. So pulling back into that place, you can see that there was this inverse fair value gap that was left behind. This inverse fair value gap that was left behind here. Alright? There was this inverse fair value gap that was left behind here. From here to here is the fair value gap that was expected to push this back to continue the bullish movement. But unfortunately, that does not happen. All right, it does not happen. It went back into it and then dropped. And even after dropping for the second time, creating this change of character, it went back again into the same area. And in that same area, we see another fair value gap here. This is another fair value gap here, or you can call it a vacuum volume imbalance. All right, we can call it volume imbalance from here to here. So this is our area. These are the area that should give confidence that we should sell. But we will not just jump into selling, because this bullish movement now is very aggressive. Understand? So we have to wait. This is the 1 hour time frame. If you go down to 15-minute time frame, you will see a break and retest as well. In the 15-minute time frame, you see a break and retest. You will see a break and retest that confirm our entry. So this is it. Measure it here. Break and retest. This is a break. This is the break and the retest. So our entry now should be after the close of this bearish candle, and that was what happened yesterday evening around 8 o'clock. I was already entangled with my trade with my trade on volatility 10 IS. Understand? So that was the reason I could not catch this trade. If not, it's supposed to be the trade that I should have caught. Okay, and the last one was this volatility 150 IS. That one, it has not delivered, though I've taken profit on that trade. This is it. Using the inverse fair value gap as well. Using the inverse fair value gap. I think this is it. Using the inverse fair value gap. Alright. So this inverse fair value gap was violated several times. It was violated several times. Okay. This inverse fair value gap was violated several times. And this time around, it has come to retest it again, leaving this evening star. All right, leaving this evening star that closed bullish, and then here became my entry. And how does it happen? Okay, there has been a bearish movement all the while. So here now becomes our lower high. Then here now becomes our lower low. Then there was a break above the lower high here that left this fair value gap. So having broken this lower high here, it is expected that as the price is coming back to this place, it should start buying up. But unfortunately, it could not buy. It continued to this point. So having continued to this point, that means that okay, there was a failed fair value gap that is supposed to have pushed price from here downward. But unfortunately again, it could not push it downward. It still violated it and closed here. So when I saw it yesterday, I said, okay, this fair value gap has been violated multiple times. And at the end of the day, it created another fair value gap here again. Another fair value gap here, between here. Let me remove this thing. this fair value gap here, look at another fair value gap that was created here. Why this one was still not being in use? Okay, so now as it's coming into this place now, we have every reason to expect a buy, because we even see that there is this a hammer, a bullish hammer that was created here. This is what makes our entry a good entry, and then our stop loss below the fair value gap. So and this has given us about 200 and something pips yesterday before I close. So I will say enter this morning again. I will say enter if I see another entry. That's going to be a long buy. So this is how to use inverse fair value gap on the higher time frame and get a very multiple pips. Thank you and God bless you.